Good. Okay, good afternoon, everybody. Thank you so much for tuning in this afternoon to our webinar. As you know, this is a webinar presented by BBB with Four Pillars Debt Relief Specialist on business restructuring. So my name is Kristen Matthews. I am the Marketing Communications Specialist with BBB serving the Atlantic provinces. And before I introduce our presenters and the content of the webinar, I did just want to go over a few housekeeping items. So throughout the presentation, if you could please just keep your microphones on mute and your cameras off, this will just help with the bandwidth and make sure that there's no lagging for the presenters. And if you do have any questions throughout the presentation, you can enter them in the chat box. We will be monitoring them and we will have a Q&A portion at the very end of the presentation, which we will answer. Also, we will be recording the webinar and we will be sending it out to everybody later. So you don't feel need to rush and take any notes or anything like that. We will be sending it out to everybody afterwards. So with those housekeeping items in mind, I would like to introduce our webinar today. So as we know, throughout COVID-19, unfortunately, some businesses have been required to turn to debt to finance their operations, accessing government loans, and increasing pre-existing debt. And servicing that debt with reduced revenue is pushing some companies into financial hardship. So that's why our two presenters are here today to talk about business restructuring. So our first presenter is David Moffatt, and he is the local director and senior debt relief specialist with Four Pillars Consulting Group. He has been assisting consumers and small businesses restructure their debt since 2015. He and his team have been able to restructure more than $41 million of consumer, business, and tax debt, which has impacted the lives of thousands of individuals across the Atlantic provinces. His offices also service all of the Atlantic provinces as well. Our second presenter is Paul Murphy. Paul Murphy is the managing partner of both Four Pillars Consulting Group and Corporate Turnaround Group. Paul spent 20 years in the investment and banking industry prior to joining Four Pillars. He uses this experience to help companies understand all of their options and guide them through their chosen path in a way that best fits their needs. And both Paul and David are members of the Canadian Debtors Association and strongly believe in debtors' rights. So with that introduction, I will throw it over to David and to Paul Murphy to get started with their presentation. And I will take myself off video.
Fantastic. Thank you very much for the kind introductions. We'll dive right into it. So some general information which Kristen already went through, but there will be a Q&A at the end. If you can leave your questions, comments in the chat, and we'll address them at the end, that would be fantastic. I don't recommend you wait until the end of the presentation to ask the question though. Put it in the chat so it's out of your mind so you don't have to remember it for later. And the goal is that we'll chat for 35, 40 minutes, give or take, and then do a Q&A session at the end and try to make sure that we do not basically extend over your time that you've allotted and been kind to be here, right? And so first of all, thanks very much for the BBB and partnering here in doing this. It's going to be a very good presentation. So what we're going to be covering today is really understanding kind of what the climate is right now. I don't know about you guys, but we've been seeing a lot of media attention lately on the actual virus itself and how businesses are impacted, but there isn't really any numbers that have been thrown around. So I went and did a bunch of research, and based on our own info, the Government of Canada info, and others, we've been able to come up and really figure out kind of the impact that COVID's had on small business, and unfortunately, it's not pretty. We want to understand the warning signs of a struggling business and really to understand what you may be experiencing. And then also, it seems like business owners also associate with other business owners so that we can all take care of each other and make sure that we're all moving forward, right? Of course, we're going to be covering the business restructuring options themselves, which is going to be the meat and potatoes of the presentation. And then we've got a whole host of resources for you so that you can basically learn more. So a little bit more information about me and Four Pillars. So again, I'm the local director and senior debt relief specialist at Four Pillars. Me and my team, we've restructured more than $40 million of debt. And really the goal is to help consumers and small businesses understand the options that they have in front of them. We are by far the largest independent debt restructuring company that exclusively represents the debtor. My pen there, debtor. And the debtor is a term that is legally defined, but really it's the individual that is actually in debt or the business that's actually in debt. In the Maritimes, I believe we're the only company that exclusively represents the consumer, and I don't know of any other companies that do this. Debtor representation is our core focus, especially as it relates to the business restructuring side of things. As you'll quickly learn as we get into the presentation, consumer restructuring is complicating enough, but business restructuring is infinitely more complex. There's significantly more components and considerations that have to be taken into account. And so it's really, really important that you have somebody fighting on your side. Who's Paul Murphy? Paul should probably be doing this, but I'm going to give the lay of the land here, and he can provide a little bit more context after. He's the managing partner of 4 Pillars and the Corporate Turnaround Group, and the CTG is 4 Pillars' sister company. So kind of all roads lead to Rome, whether you're dealing with CTG or 4 Pillars. It really just depends on the size of your organization, whether you're a small business that might be just an owner operator, or a medium to large size corporation that might need a little bit more expertise. CTG represents only the interests of the business owners, not the creditors, and the goal is to provide an unbiased assessment of the business situation. And kind of the philosophy behind 4 Pillars and CTG is to give an education first assessment. We believe that people should understand all of their options available to them, not just the options that we can necessarily help them with or that they can get elsewhere, right? It's really a full assessment, so business owners, consumers alike can make basically an educated choice on what they want to do. Paul advises on the most effective options to handle and deal with debt and the crises that businesses face. And the idea is to really understand all of the liabilities, not just to, not just of like the personal debt or the business debt or anything, but really the whole scope of the whole situation. And the goal is to explain all options based on the specific circumstances and recommend a plan of action. So let's dive into some statistics here. So I pulled these in December, I believe it was. And so these probably would have been based upon November because they seem to release these on a monthly basis. So over 40% of Canadian businesses saw a decline in revenue by more than 40%, which is insane. And about 60% have declines of more than 20%. And you imagine that the overwhelming majority of businesses, small and medium-sized business, the business climate right now is struggling to a significant degree. In the Atlantic region, over 36,000 businesses applied for the CEBA, and 80,000 wage subsidy applications have been received, funded, which has represented more than $2 billion in wages. And when you start looking at these numbers, the fact is that these wages are basically lost revenue, right? And so once the wage subsidy ends and once the government programs end or get reduced, what happens at that point in time, right? And that's really what we want to be able to prepare for and make sure that businesses understand what they can start looking at now to protect them from future liability. And as we all know, operating a business just during normal times is tough enough. And now that we've got this virus and this pandemic happening, things have become a lot more difficult. The way that business has to operate, the expense that businesses have to incur, and then the revenue decline, it's really a nasty situation. And it's not fun by any means. 53% of Canadians are living paycheck to paycheck. Most people aren't really finances are a taboo topic, and so you wouldn't really know this, but it's absolutely alarming how many people don't have money at the end of the paycheck. 25% of Canadians say the debt's overwhelming. 27% say they can barely afford their needs, let alone their wants. And 60% of people are not on track for retirement. And as we know, business owners are absolutely included in these stats. This morning, I looked up the numbers, and it was 2.8 million Canadians are business owners. It represents about 15% of the total working class of Canada. So absolutely, these stats also apply to business owners themselves. And so we just want to make sure that, again, people understand their options. So typical warning signs. Biggest one by far is being behind on CRA payments and or filing. CRA has some special rules that they get to follow, which can be a little bit complicating and really nasty to small businesses. If you've missed lease payments, have threats of eviction, the government has done a fair amount with their rent subsidies and everything like that. But certainly the deferrals primarily, they're just that, deferrals. If you have escalating accounts payable, if the amount of money that you owe people and other businesses is slowly and steadily increasing, you can't get a handle of it, certainly a warning sign. Seeking credit or using personal credit to sustain the business. One of the common trends that I see, and Paul probably sees this quite a lot as well, is that by the time a small business reaches out for help, the majority of the time their business and their personal finances have begun to commingle, and the amount of risk and liability they're taking increases, right? Missing payments to long-term bank debt, especially if any of it's financed, and applying for merchant advance servicing, factoring, all this type of stuff. When you're using these types of services for growth means, they can make sense in certain circumstances, but when you're basically borrowing from your future cash flow to service your current debt, it can become quite the dangerous situation, which you definitely don't want to get yourself into if you can avoid it. So knowing when, if, how to restructure, as I mentioned earlier, is infinitely complex. Your revenues, the viability of your business, the type of debt that you end up having. For example, government that's owed to, rather debts that are owed to the government sometimes carry special rules that make them have and bear more liability than other debts. The type of structure the debts have, whether they're personally guaranteed, whether they have director liability concerns, whether they're secured debts, all of this comes into play to determine the most suitable option for restructuring. And this is where we start falling into the actual options themselves. So I'm going to hand over the presentation to Paul for a little bit. Paul, I'm hoping you can give yourself a little bit more of an intro, and then I will switch to the next slide.
Perfect. Thank you, David. That was excellent. Yeah, I'm Paul Murphy. As David says, I am a managing partner with 4 Pillars and also Corporate Turnaround Group. 4 Pillars is, as David said, the largest independent debt restructuring company in Canada. We have about 63 offices across the country, and we've actually restructured approximately $2 billion worth of consumer debt. And it's, you know, the debt side is one thing to help the consumers. But what is a key focus for us is the financial rehabilitation of a debtor, whether it's a small business or whether it's a consumer who's gone through the debt restructuring, and giving them the tools and the tips to ensure that they don't get back into the same financial challenges they've had before. We have an incredible education program that's provided to all our clients. It's got about 30 hours of comprehensive education, everything from budgeting to credit to improving credit. And we're just in the process of actually adding our small business module, which is going to be a great resource for small businesses as they go through the process. So I'll quickly go through some of the debt restructuring options. We're going to keep them fairly high level. We do have some great resources for you guys to access, which we'll discuss after the presentation. So yeah, I'll get started on the option. So informal business restructuring, it's basically a solution that requires negotiation with each creditor, suppliers, and potentially CRA. Ultimately, the end result is to achieve stability for the business. It's typically a service that's used when businesses have cash flow, they are a viable business, and they just need a bit of a break. They need new terms to which to repay the debt. One of the biggest negotiations we're seeing right now is with landlords and the ability to either get a lease reduction, relief for a period of time, or a deferral on lease payments is being critical for the businesses to survive. And as we go through the negotiation, one thing that we're constantly reminded is the landlords have their own mortgages, they have their own bills to pay. So we have to bear that in mind as we go through it, because the landlord also needs to survive this. And many people look at the landlord as the reason for closure, and some of the huge organizations and property management companies certainly have a lot more resource and a lot more flexibility, but sometimes we're dealing with maybe one landlord who owns one building, and that's his source of income for his family and to pay his own bills. So it's always good to understand both sides as we go into the negotiation. And ultimately nobody wants to see the business close, especially during these times. But what is critical is ongoing communications with the landlord or any of the creditors. And what we see is action is enforced by the landlord or the creditors or CRA when there isn't any communication. They panic, they don't know what the situation is, they don't know what the business is planning, and it forces them to take action. And too often, as David says, we get the call when the landlord has issued the eviction notice, or CRA has liened a property or garnished a bank account. And that's in many cases the creditor's way to force the business owner to make a decision and stand up and deal with the debt. Ideally we'd like to see the business owner prior to that, so we actually have a bit more time to put a plan in place and deal with those situations. But ultimately, informal business restructuring, the end result can achieve quite a few things. It could be a one-time settlement of delinquent debt. If the business has the ability to raise cash to keep the business going, often it's a good time to settle delinquent debt versus pay it in full to preserve the cash for continuing operation expenses. It's a time to actually, take a look at the accounts payable and the suppliers and see which ones are critical for the business operations and which ones aren't. And it can also include a modification of secured lending. So typically when there's long-term bank financing, they have either a direct security agreement over some of the assets or a general security agreement over all business assets. But it doesn't mean that there isn't the ability to change the terms to which things are being paid back on. And we're seeing that a lot right now, especially the big banks. They're very flexible with some of the terms to ensure that the businesses stay operational. And ultimately it's understanding the viability of the business, the structure of the debts, whether they're secured, unsecured, the action the creditors have, and the priority to which they would typically need to be paid. But like we said, at this current climate, no creditor wants to see a business close. But lack of communication is one of those critical things to ensure a plan is successful. So if we just move on to the next slide. Formal corporate debt restructuring. So this is any filing done under the Bankruptcy and Insolvency Act. It is done with a licensed insolvency trustee. They do play a critical part in any restructuring, as any formal filing does require the trustee to administer the process. And also they have a duty to represent the interests of the creditors and make sure the creditors are protected through the process. The role that the 4 pillars and CTG take on is to be the advocate for the debtor or the small business, to ensure that if they're going through this, that it's done on their terms and giving them the best option possible to succeed with the plan that's put together. The great thing is the formal restructuring, it does provide a stay of proceedings, so it gives the business protection from the creditors, and it gives them the time to restructure the business and come up with a plan for the creditors to consider. Typically, it includes unsecured creditors, CRA, depending on the type of debt and the structure of the business, can absolutely be included in it. And it's it's the opportunity for the business to present terms to the creditors that work for their business. And the restructuring strategies are as unique as the business itself, and repayment terms can be based, based on those needs of the business. If it's a seasonal business, they can pay more back during the summer, less during the winter, vice versa, depending on the situation. So, it's an incredibly flexible process for how repayment proposals can be structured. It also, gives, as I said, legal protection for the companies going through it. They can remain operating if they're looking at a business restructuring as they go through the process. Primarily, it's intended for a business that is a viable business. Again, similar to the informal restructuring, they have the ability to continue. They have the revenue, the cash flow. They just need new terms to repay the debt. The formal restructuring gives the opportunity to actually reduce the amount that's owed to the unsecured creditors, and get back on new payment terms, which are going to be way more affordable for the business. So we'll just go on to the next slide and talk about orderly shutdown of business. And, nobody wants to see their business close. And for business owners, especially small business owners that have put their heart and soul into creating a business, it becomes a very, very emotional decision. And in many cases, what we try and do is take a step aside and look at the true viability of the business and try and remove some of the emotion of it, so the business owners can truly make a decision as to what is in their long-term interest. And sometimes, unfortunately, a closure of the business is the best option, and it's just ensuring that that is properly planned. And in doing so, often we can minimize the financial implications of the directors of the business, the shareholders of the business, and keep them out of any type of need for restructuring or insolvency. The times when we would look at an orderly shutdown of the business versus a restructuring is when the revenue isn't able to sustain any type of really new payment plan with the creditors. The situation is getting worse. The debt is continuously increasing. They're looking to use personal credit to float the business. No salary is being taken out of the business. This is a big one. We see that the business owners are putting their heart and soul into the business. They're putting hours and hours of effort into the business. It's an incredibly stressful time for them, and they're not even having the ability to take a salary out because they're looking to there's no funds available for salary after certain debt payments. Typically what we see is the small business will start to fall behind on CRA first. They'll pay the landlord, they'll pay their employees, often they'll pay the long-term bank debt. And CRA is one of the easiest to fall behind on, because depending on how often you need to do your filings, it could be quarterly, it could even be annually, that money isn't being set aside for that, even when the filings are done. The CRA is unfortunately, the one of the last options to make a payment for, to keep the business viable. One of the things, that we do see is, even if businesses aren't able to make the payments, if they're not doing the filings with CRA, we see CRA really start to take action at that stage, because they just don't understand what's happening in the future, whether the situation is getting better, whether the situation is getting worse. It's just a state of unknown for CRA. So, even if businesses are delinquent on CRA debt, if they can stay up to date with the filings and even make payments to the current filings, there's often the ability to come up with a new repayment plan with CRA for the delinquent debt. But they do need to see the fact that the business isn't getting further and further in the hole, and they're up to date with the filings, they're making the payments on the current filings, that's the time when they would be usually willing to consider some kind of repayment plan on the delinquent debt.
I can add quickly, Paul, just on that.
Totally.
I know that the majority of times that I've seen that CRA gets very, very, very aggressive is when the individual small business just isn't communicating with CRA. What I've found is that as long as the communication stays up, the filings stay up to date, CRA is usually fairly reasonable to deal with. And so it's usually when people just stop communicating entirely that CRA gets really aggressive, and that's why I think people don't like CRA very much. So yeah,
totally, absolutely, good point, David, for sure. So orderly shutdown of business is typically when a business can't go through the formal restructuring. They just don't have the cash flow to support any type of new repayment plan that would be accepted by the creditors. They don't have the ability to go through any of the informal restructuring process, and sometimes it's just a case of the business owner is done with the business. The stress of continuing to operate it has become too much, and they're just looking for an exit plan, and they want to make sure that they do it in the right way. Doing it in the wrong way, we see businesses close down to try and get away from the debts that they have with the creditors or CRA, and then they simply open a new business and start operating under that, thinking, oh, I'll just open a new business and I'll operate without any debt. Well, if it's done incorrectly, the debts can follow the new business. CRA can assess the new business based on the fact that it's using, assets of the old business, etc. So, it has to be very carefully followed to ensure that it is done correctly. Next slide, David.
Yeah, perfect. Just to add really quickly, I find that a lot of individuals, when they shut down businesses, think they've done it properly. And I've had a few people come to the office thinking that their business was shut down properly, and come to find out they ended up owing, old HST debt or payroll debt or anything like that. And so I think it's imperative that anybody that's considering shutting down their business, especially if they have debt inside of the business they want to shut down, that they speak with somebody, because the last thing you want is to find out years later that you end up owing a bunch of debt that you thought you didn't owe because you shut down the business.
Yeah, great point, David. And to add to that, if CRA, the business may no longer be operating, there may be no revenue, but if the filings aren't done, even if they're nil returns, CRA, tend to go back and look at it and say, well, this is what the business was doing, this is what it owed for the previous month, and then there's an assessment based on what they believe that would be owed, even though the business had no revenue. They just don't know that because the filings haven't been done. So they look at past history, assess the business and the individual on it, the individual as a director or officer of the company. Director's liability will include, payroll, GST, all of those type of CRA debts when the business closes. So it's imperative that it's done properly to try and minimize the impact on the individuals. And when the business is assessed, or the individual is personally assessed for the outstanding CRA debt, when the filings weren't done, suddenly penalties and interest are added up. They get a shock, a few years down the line, that now they're being pursued for this debt, and it comes out of the blue, and it's obviously incredibly stressful for those individuals.
And we've brought up director's liability a few times. Are you able to give a definition of that for those that may not be familiar with that term?
Yeah, totally. So anytime you open an incorporated business, you assign directors and officers. And to another point outside of the restructuring, for those that are opening a new business or have a new business, it's always recommended to review who the directors are. Often husband and wife go into a business, both become directors of the business without fully understanding the director's liability that fall onto them in the event that the business faces financial challenges. So basically CRA debt, GST, HST, PST, payroll, WCB, have what's called director's liability, whereby if the company is unable to pay, then the directors or officers of the company is liable to make those payments. And basically what will happen is the business closes down, then the directors will get a personal assessment for the outstanding amount that's owed. So, you know, when looking to structure the business, you know, one party can be a shareholder without being a director and without facing the directors, the risk of the director's liability. So it's always good to take a look at that. What we also see is people who resign as a director thinking, great, I've walked away, you know, I'm no longer a director, but any debt for CRA that was incurred prior to the resignation, they're still liable for. So it's not as simple as just resigning as a director and moving away from it. Any future debt, you know, they are not liable for after they've resigned, but typically, you know, they're looking to do it because the business has become delinquent with CRA and they don't fully understand that the liability follows them if it was incurred during their time as a director.
Awesome.
Does that answer your question, David?
It does. Thank you.
Excellent. So we'll next look at corporate bankruptcy. You know, it's probably one of the better known solutions for a struggling business. Constantly these days, you know, there's news on the big names that have filed for corporate bankruptcy, whether it's Canada, US, and it's basically a formal legal process to deal with the business debt. What it does provide is a fair and orderly distribution of the company's assets amongst its creditors. The trustee basically takes control of the liquidation of the assets of the company, and then those funds are distributed to the creditors based on a pro rata basis, but also based on preference that they have, depending on whether they were secured. You know, the certain preferences to the landlords, etc. So depending on the situation, but you know, instead of the individual business owners trying to make those decisions and running the risk of getting it wrong, it can be a good way to put a clean closure to the business. You know, typically when the business has a lot of assets, possibly aggressive creditors, it's a good way to, you know, to make sure the process is followed correctly, and for the business owner just to simply, you know, hand it off to someone else that's done and move on. The critical part is, again, as we say, before doing that, understand what the personal liabilities are. It's very rare these days that, you know, with the bank debts, with the lease agreements, that they're not personally guaranteed, and it's understanding, you know, what the personal liabilities are going to follow through the closure of the business. A corporate bankruptcy deals with the corporate entity and the debts owed by that corporate entity. It does not deal with the personal guarantees or the director's liability. That would have to be done through a personal restructuring to do that, and understanding that is critical. Sometimes, you know, with some of the small business backed government loans, the personal guarantee isn't for the full amount, it's only for 25%. So it's really important to understand that side of it. Corporate tax typically doesn't fall as a director's liability unless dividends have been taken, etc. But again, it's good to go through a planning process before going through the corporate bankruptcy to fully understand what's going to happen during the bankruptcy and what's going to happen after the bankruptcy too. It can be a very expensive process, and you know, it's something small business owners think, my business has failed, I'll just go bankrupt. They go to the trustee and they say, sure, that'll be $20,000 to process, you know, a very, very basic bankruptcy, when an orderly shutdown of the business maybe a better option for them with the same results. You know, sometimes the corporate bankruptcy can be used together with part of the informal process to try and minimize personal exposure if it's done correctly. You know, there may be a situation where there's you know, a partial liquidation of assets to cover some directors' liabilities or personal guarantees, and prioritizing those debts if it's done right, and you know, the correct process is followed, and we're not, you know, creating a situation where there's preferential treatment of a creditor, i.e. one creditor is being paid ahead of another creditor without any true preference for that payment. So that's about it. I mean, we went through it sort of a pretty high level. David will quickly touch on some of the resources now that's available to you. We do have a great questionnaire available on our website, which David will tell you a little bit about.
Yeah, certainly. So on the Corporate Turnaround Group's website, so the website is ctgi.ca, you can take an assessment and it gives you up to a 9-page report that just simply outlines all the potential liability considerations that you need to understand when you're considering all of this type of stuff. From my understanding, Paul, if you fill it out, nobody calls you. It's basically a free, you're just getting the information, and then if you want more info, then you would reach out.
Totally, yeah. I mean, basically what it is it's a summary of the legal and the practical implications of each of the options that the business owners have. So it's a dynamic questionnaire whereby, depending on how you answer the question, will then produce the report relevant to your unique situation. So once you have that report, it's called a situation summary. You can look at it. In some cases, it's enough information to provide for the business owner to rectify the situation themselves. In other cases, they're taking it to their trusted resource or accountant or their lawyer, and they're going through the options there. We're always available to offer additional support to those business owners that need it. But you know, it is a great tool. We worked hard to get it in place once COVID started, so the business owners had, you know, they had a stress-free way to look at the situation. They have, you know, all the information that they need, you know, at their fingertips, and they have the time to then review it without any type of pressure and understand exactly, you know, what their options are. So yeah, it's very detailed, and it's a free assessment. So feel free to, you know, share it with anyone that needs it.
Yeah, and I tested it out, and it is a phenomenal piece of technology. The level of detail is incredible, and I know that similar to with consumers, right? You know, dealing with debt is you know, oftentimes very embarrassing for people, and a lot of times people don't want to talk to a human. So the assessment will allow them to get a very, very good understanding of their situation without actually interacting with a human, which sometimes can be fun, especially these days. So the website there is ctg.ca for the CTG's website. 4 Pillars has put together and continually updates and monitors all of the government programs, the benefits, not just for businesses, but for consumers as well. And we have the website listed there. And of course, the BBB has a small business resource page, which I had to include here, which has some very, very good stuff on it. And so you can use these 3 resources really to get an understanding of all the programs, a good assessment of your situation, and then a whole bunch of resources to help you run your business more effectively. And the goal is that we all get through this and prosper, and we'll get through it together, right? So employees are a big part of our businesses, and probably the backbone of every business that is on the call and that will be listening to this. And we know for a fact that there's a correlation that exists between job performance and stress. And so we know the #1 cause of stress is finances and money. And so if you have employees that are asking for more hours, pay advances, cashing in RSPs, all this type of stuff, please recommend that they reach out for professional help. Really, we just want to make sure that people receive the proper education. And of course, we're always available to offer financial literacy sessions free of charge. That's not an issue at all. We just want to make sure people get the proper information for their situation. So does anyone have any questions? And we've got our emails up there. They do go directly to us, so more than happy to answer anything after.
Thank you guys so much for that presentation. That was some great information. I have been monitoring the chat box, no questions yet. So please, if you do have any questions, please enter them into the chat box. Just essentially, I have just put the resources, the links to the resources that you provided in the chat box, so you can easily click on those and head to those resources if you'd like. But yeah, please put any questions that you have for David in the chat box, or as he said, if you kind of think of something afterwards, I know that happens to me quite a bit, you can feel free to email David or Paul at their emails on screen here.
Absolutely.
We'll be sending the link to this recording out to all of our accredited businesses, so if you're watching this video after the fact, if you didn't have a chance to record to attend today's live presentation, you can feel free to email David or Paul as well. Just we'll keep an eye on the chat box just in case there are any last minute questions. But the last portion of today's presentation, in addition to this great information today, we're happy to be rolling out for our accredited businesses and their employees. And that last little bit, David, was a perfect segue to this affinity program, an exclusive benefit to our accredited businesses to help make sure that your employees are as productive and as good a place as possible. So David, I'll let you and Paul describe what that's all about.
Yeah, certainly. And I think I can pull up, I'll pull up the PDF if that's okay. And then we'll have it and we can talk to this as well. So essentially what we're offering the accredited businesses is essentially for any business or their employees who are struggling financially, who want to get more information about their situation. We're offering free consultations to help them understand those options and to ultimately help them implement the plan that they end up choosing. If you decide, well, at the consultation, just to reiterate, the goal is to really educate you on all the options so you can make an informed decision. If you do decide to end up pursuing an option that we can assist with, we'll make sure that you get offered a 12-month credit rebuilding monitoring program, which is going to be exclusive to this BBB program, which really will help the credit rebuilding component, because the debt restructuring component is, at least in the grand scheme of things, a very small component of financial rehabilitation. It's really going to be to have a proper plan implemented after the fact. And from what we've seen, individuals who take an active approach to the aftercare program succeed significantly faster. And that's true whether they're the business owner themselves or whether they're the employee of said business. We're more than happy to offer free presentations on financial literacy, strategies to deal with debt, credit rebuilding, any of that as well. And all you have to do is email me. I'm pretty much going to be the liaison for all of this. And yeah, so it's going to be very, very exciting, and can't thank the BBB enough. And it's going to be great.
Well, and thank you. This was a fantastic presentation. It's not, it's not an easy topic. The topic that we were discussing today, not necessarily a pleasant one, but super, super important for all businesses to know. So David, Paul, thank you very much. And thanks very much for the opportunity to join you in this partnership for our accredited business employees.
Absolutely. Thank you.
Kristen,
thank you very much.
The video and mute myself and let you just wrap up and close.
Absolutely. Not too much more for me. Just another thank you to David and Paul for doing this for our accredited businesses. And again, just to echo Peter, we will be sending out a recording of the webinar, so please keep an eye out on your email for that. If you do have any questions, you can feel free to reach out to David or Paul through the email, or you can reach out to BBB if you have any BBB related questions to info@bbb.org. Just once again, thank you to everybody who tuned in today, and we will definitely be doing some more of these with some of our other accredited businesses in the future. So if that is something that you are interested in, if you're an industry expert and you have a topic you'd like to present on, please feel free and let us know. We are always looking to work with our accredited businesses. So with that, thank you everybody so much for joining today, and I hope everybody has a great rest of their Wednesday. Awesome. Thank you, everybody.